you're looking for professional day trading education and high-level trade analysis and dissection, you have come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you exactly that, professional day trading education, all here for free on YouTube and on X. And now that that long-winded nonsense is out of the fucking way, today we're going to be talking about a couple of trades that I took, one long, one short. We're going to be dissecting it. We're going to be talking about how to take a look at holiday markets. Let's rock and roll. I hope you all had a wonderful day. One sec here as I fire up my charts. Okay, let's do this. Okay, so hopefully you guys had a great day. Let's get into it. Let's talk about the very first trade that I took here this morning. For those of you that might just be joining us for the first time, these blue levels represent technical levels, support and resistance levels, that I then develop trade plans. These trade plans are developed at and before the market open at 9 a.m. And we don't deviate from that. That's why you see the consistency that you do on this channel, because these trades and trade plans, we don't deviate from it. As soon as the market opens, we already know exactly what to do. And let's get into the trade and the trade plan that was on Qs. So first off, we have the upper level, which is a short, and this lower level that is a long. What we were dealing with here today, one of the issues was a really wide range. Qs was a main watch because where it was roughly going to open in this area, it put us within striking distance of this level. So that level was pretty close, well under a point, about 40, 50 cents away from that level. So the trade plan was, once the market opened, if we popped at all coming into that level, we were going to execute that trade short by buying puts. Now, it didn't quite do that. We kind of had something a little bit different happen. I'm going to zoom in. So this one here, the market, oops, sorry about that, folks, one sec. So the market opened and it washed, which is fine. So what we're looking for then is any type of a movement back up, and then we would start in at pre-market highs, right? And then work into the trade short. Now, didn't really get much. I was able to bang off quite a few entries on this because of the level of protection in this trade. There's a lot of protection. So I'm fairly confident that, it's not even about confidence. It's about where the odds are. The odds dictate that we will get a reaction into this level because of the valid resistance and the amount of resistance. So executed that trade, and absolutely this thing took off. As soon as it started coming down, that first candle and second candle were massive. That's a big return from lows to highs within those two candles. You're already looking at almost 100%. Like, it's getting real close within two candles of entry, a 100% ROI trade, which is absolutely ridiculous, especially for a Monday. And that's why I love options. And that's why this strategy works so incredibly well. Your risk is minimal and the returns on it far exceed any type of risk. So I locked in a staggering $14,057. All basically the bulk of those profits were done within 5 minutes. So really, beautiful trade, beautiful morning here on Qs. We were looking for a potential long coming down into this level, and it actually triggered a little bit later on at about 10:35. It came within about 65 cents of the entry level, and it caused a really nice reaction. And I even said here that even though it bounced a little bit, and that's fine, we'll go over the long here on SPY, that it would be short-lived. And it's going to be short-lived, although there was actually some support. If you take a look, there is a massive volume zone. We have lows from this red day, open from the green day, open from the green day, highs of that green day, and previous close highs of this green day. That's where it found support. Okay, there is a volume, a technical volume level there. And that's why it held that level. It was short-lived. Like I said, it was going to want to find a lower support level, which is what happens on gap ups when we open up near resistance. It'll fail that resistance, and in time, it will come down into and test very close into that next level down, or the main support level down. So really, really nice trade on that. We all just like completely smoked that bitch. Beautiful. So Qs on the long here. Now I'm going to talk about that. Now, I pointed out this level here. This level actually was not struck. Okay, so that wasn't struck. What I was looking for, and there was a level here on SPY pre-market right in here. And at the time that SPY was heading down into that level, I actually missed that long. I missed it. I was giving a lesson at that time. So as this kind of comes down and it stops and it pulls more, I look left onto the chart and I'm like, oh, wait a minute. This is actually finding a level of support that's pretty substantial on the daily chart. So it's like, for what it's worth, I'm going to execute a small position because I had already locked in at that point. I'd already locked in over $10,000. So I obviously have some profits to basically play with, because I don't care if I lock in 5,000. I don't need the full 10,000 is what I'm trying to get at. So if there is an opportunity, I will take it. But however, I will take it with small size. Also, another note to that, okay, and this is a little bit of insight into how I trade and how I think. I still have had contracts on the short. What I had left was a small position. That position was worth about $2,000, $2,200, $2,200, somewhere in that area, if I remember correctly. So with what I was executing this trade with, if it failed, that short position that I'm still in would take care of all of those losses. So it'd basically be on what I had left of that position. It would be scratch. And if it started coming down more, obviously I would have made more profit on that. But that's how I think in these positions in regard to sizing. I'm not just sizing in with I don't know, some arbitrary or random amount of contracts or shares in these positions. It's always thought about. It's always intentional. If I'm going to execute a secondary trade and I have, 10 contracts, 20 contracts left in a position, I'm going to use that and size this next trade with that remaining profit on the other. So hopefully that made sense and you guys could follow along with that, because it is a really good lesson for you. So on this long, worked it a couple of times, ended up executing a secondary ad. Like I said, very small position, and locked in an additional $1,211. So today was a pretty substantial day for the first 30 minutes of the market open. So like I said at the beginning of this, I was going to talk and mention a little bit about holiday markets. And holiday markets get a little bit tricky, or can get tricky, because there's not a lot of institutional money. Institutional traders are starting to go on holiday and they won't be back until the new year. So what happens with that is you're going to have that first. So maybe not today. Okay. Today had some movement, but moving forward into this week, as a heads up, you need to execute the first reaction. So I'll give you a little, we'll just pull this chart over. One sec here, Jesus Christ. So we'll pull this chart over and we'll take a look at a morning play if it were to happen. So this is our level to go short. This is our level to go long. So let's work off of a long. Let's say that the market opens up nice and close into a support level, but there's enough distance to execute it. So at the market open, if it dips into that level, you execute it. That first reactionary bounce, get out. Don't be looking for some sort of big follow through on any of these trades until basically now the new year. You want to be very incremental in your trades, and I'll explain why. If you're trading proper stocks, SPY, Qs, AMD, Apple, Tesla. Well, Tesla's a little erratic, but regardless, Nvidia, those types of trades, Amazon, Google. If you're trading proper stocks and not bullshit penny stocks, if you're trading proper stocks, they are heavily institutionally traded. And once that institutional money disappears, what you're going to have, and I'll show you here, we'll redraw that trade. So market opens, dips into the level, you get that first reaction. If you don't execute and pay yourself, you run a risk of doing this the rest of the day in a real tight consolidation. Sure, there might be an opportunity here or an opportunity here, but then it'll go right back into just this weird consolidation because there's no money to move that. Remember, the floats of these stocks that we are taking a look at, I know they're ETFs, but you guys get the point, are massive. It takes a massive amount of volume in order to move these stocks up or down. Okay, so you need to be aware of that. And if there isn't that institutional money being poured into these, they won't move. They'll just fucking consolidate. And what's going to happen is you're going to be looking for entry here. You pay yourself a little bit and you'll be looking for even a close target here and you'll never get it because it's just going to consolidate. And especially if you're trading options, you're going to get melted out. So just a little piece of advice. It's up to you to fucking listen or not. Most of you won't, but that's why most of you will fucking fail. I mean, that's how it is. That's the sad reality. All you have to do is listen and you'll do really well. So on that note, folks, if you do and you are a listener and you want to come learn how to do this and have a little bit of a career change, come to tricktrades.com. Work with a trader that can absolutely get you there, that has been doing this a long time, not a fly-by-night fucking kid that lives in his mother's basement. And if not, there's now 1,500 free videos on my channel. But that's now up to you to sort through all that nonsense. So have fun with that. And I hope you all have a wonderful evening. And we'll see you tomorrow. Adios, folks.